Good afternoon. This is Ken Long from Tortoise Capital Management with a quick review of a case study on a combination trade, combination of the Quick Frog and the regression line crossover from 2012, August 16th with symbol IWM. So this is 3-minute charts. Looking back at one day, the dotted line is the close. Slight gap open, sold off. Found a low about 10 o'clock local, that's Central Time, and then price started to move back up. When price re-entered the river, I front ran the entry, which was too early. What I should be doing is entering right around here in the blue circle where the regression line crossover has occurred, and then both the price, which is represented by this 2-period Bollinger Band in orange, where price and the regression line 10 have entered the river, and now everything's pointing up. The price, the regression line 10, and the regression line 30 in black has rolled over. So I just acknowledge the mistake and moving on. So entry 1 is at $80 even with a 30-cent initial stop. Now this stop is reflecting about 20 cents below the entry because I ran out of chart, but the actual stop is about 10 cents lower than that. And that simply means that's a manageable stop. If it would take out the low here, I'd go ahead and take that exit anyhow and eat the minus 0.7 R loss. The initial stop for me is simply to ensure that I don't take more than a 1 R loss and that my position sizing is appropriate. So anyway, we get the entry at 80.20, or I'm sorry, at 80 even. Price goes right through the Bollinger Band mean, the middle of the river. That's the red line. The river is the 30-period Bollinger Band plus or minus 1. And it leaves the river, continues to march up, gives a little pullback. Price just comes down, touches the edge of the river, and takes off again. At 80.40, I've got 1.3 R in hand, and price is moving, and S&P is going up. So go ahead and enter a second position here at 80.40 with a 0.3 initial stop. For those of you trading futures at home, that's a 3-point stop in the TF contract. And it takes off again, runs up, gets a little pullback, comes to the edge of the river, and starts to take off again. I make my third entry at 80.80. So we've got a couple R in hand right there. Finds support of the river, takes off. Never crosses the Bollinger Band mean. Nearing the end of the day, I decide to take it off when the regression line crossover looks like it's occurring and price comes back to the river. So I exit all 3 positions at 81.10. And so that's our 3 trades there for a net of 7R. This purple line is the volume weighted average price for those of you keeping score at home. Meanwhile, over in Silverland, the same day, I've been a stealth silver trader here this past week or so as it's found support and starting to inch its way back up. And so again, we got the 3-minute chart with the dotted line is yesterday's close. Silver opened and then took off. You'll notice when the regression line leaves the river, now we have the beginning of trending behavior in my definition. So we got price and the regression line 10, regression line 30, all leaving the river. After this little congestion period here, I get a entry at 31.05, and I'm using a $1 stop because when I'm actually initiating this one as a swing trade, and I like to have a full dollar stop. That looked like a reasonable move with the potential of swinging all the way up to 40 if things get wild. So silver immediately takes off and goes, and I say, you know what? That was at that time still the best idea going in my stack, so I went ahead and took a second entry, and this time I'm going to use a turbo position. So I enter the second one at 31.20 with an initial stop of only 0.3, so I can be 3 times as large on this position size as I am on the first one, because this is strictly going to be an intraday trade. The price quickly runs up to 31.65, and then there's this kind of sideways choppy and slightly grinding upwards market. But I've got the easy money in hand here, so this is going to be a winning trade no matter what, and I'm just looking for a place to peel off the turbo position because I intend to carry the initial position overnight because it's working well. It comes down, we get a sideways quiet channel, get another breakout here at 31.65. I was out of bullets, so I couldn't add a position, but I've already got 2 good positions on. Later in the afternoon, so after 2 o'clock my time, 45 minutes before the open, we get a peak and then a regression line crossover. So I go ahead and decide to exit at 31.85 with the turbo position. And so going into the close are around 31.65. So at the moment of exit, what I do is I cash 3/4 of my position, because I've got 3 times the position size on this one. And so I net 2R on that one, and that's going to pay for the overnight risk on position 1, which is using $1. And so I'm able to put $1 in hand, get a free trade overnight, and have reduced my position size going into the close. So a pretty good day in silver and in an IWM. So thanks for your attention.